Okay, so in this video I want to give you some brief on what is happening under variable costing and absorption costing. So as usual, I would like to explain some of the important theory that we are going to apply when we prepare the income statement under variable costing and absorption costing. Okay, so let's start with the theory part, then we will do the example. Then variable costing vs absorption costing. So we must know the difference between these two methods so that we will be able to prepare those statements. So absorption costing is required by GAAP for external reporting purpose. This is the costing method used for traditional income statement. So uh, in general, as a knowledge that you have to understand is that absorption costing method is the one which has been approved by the IFRS. So the other method for variable costing has been rejected by IFRS. It's not allowed in terms of IFRS. So however, the preparation for variable costing method, it help the management in a decision making according to how they should improve in terms of the cost of sales, in terms of the cost that they are spending for the product that they are selling. Alright, so variable costing is often used for internal decision making. Okay, so I'm not gonna read everything, but I'm gonna check what is important. Then the difference between the two methods is how they account for fixed manufacturing overhead. So these two methods, there is a huge difference on how they account for fixed manufacturing overhead. Okay, we are going there. Firstly, understand what is product cost, what is period cost. So these two costs are not the same, but they are very simple. It's item that you are familiar with, or is an item that you know in accounting. So if we are talking about the product cost, we simply talking about the cost of sales. We are talking about the cost of sales. Remember, if we are talking about the cost of sales, we are talking about the cost that we spend in order for us to do what? To sell. In other words, that's a direct cost that were involved to produce the product that we are selling. Alright, then let's proceed. Then the product cost are manufacturing cost incurred to produce the product to be sold, is what I was explaining. Then product cost under absorption. Under absorption include both manufacturing cost, which is fixed, and variable. So when we prepare income statement under absorption cost, we are going to include fixed cost and variable cost as a part of cost of sale. You have to take note of that. Okay, then the product cost under variable costing include only variable manufacturing cost. So when we prepare the variable method, simple means that we are only going to include the variable cost to calculate our cost of sale or the product cost, which means that the fixed cost is going to be excluded when we calculate the cost of sales under variable costing, or marginal costing is the same. Marginal and variable is one method. Okay, then absorption costing account for fixed manufacturing overheads as a product cost. Okay, I think we talk about this one. Then the variable costing account for fixed manufacturing overheads as a period cost, because under variable we didn't include the fixed cost under cost of sales. we are going to account them as a what? As a operation expense. Okay, I'm gonna explain that to the one that we are going to. Then we have a period cost. What is period cost? Simple as operation expense. Operation expense. So basically, if we are talking about operation expense, these are not the cost of sales and these are not the product cost. So you know what is operation expense under income statement after we have calculated the gross profit. Okay, then the period cost are non-manufacturing costs incurred to operate the company. The period costs are accounted as for expense in the period that they incur. So if you have been given the period cost of previous year or for the next year, we don't include them, we only include for the current year. Okay, then absorption costing account for both variable and fixed non-manufacturing cost. All right, remember, uh, non-manufacturing cost under absorption costing account, it doesn't form part of what? Product cost. Only manufacturing cost of variable and fixed that form part of what? Product cost. If they are non-manufacturing cost, you have to treat them as a what? Period cost. I hope it's clear. Remember, we have a fixed cost and variable cost. So both of them, they have non-manufacturing and they also have what? Manufacturing cost. So non-manufacturing, they are the one that form part of what? Of period cost. Then manufacturing under absorption, both they form part of what? Product cost or cost of sales. Please, this principle is the one that is going to assist you to prepare those two income statement. Let's proceed. Then, where are we? Okay, selling an administrative cost and fixed cost overhead as a what? As a period cost. All right, selling and administrative, you know that is non-what? Manufacturing cost. Okay, let's proceed before we waste a lot of time. Then under variable costing, only those costs of product that vary. That vary simple means that are fixed, that are variable. That are variable with output are product cost. So we explain this under variable costing method. We are going to include only manufacturing cost which are variable. Then under absorption costing, all cost of production are product cost regardless of whether they are variable or fixed. We are going to include them. Okay, now let's go to our first example. Okay, assume a vehicle produced a single product. Available information for the year is 25,000 units were produced and 20,000 units were sold during the year. So on number A, we have 2 units. The first one is 25,000 units that was produced. Then the other 20,000 were sold. What about the difference between these two? The difference between these two, we call it a closing. It's closing. So it's not yet sold. Alright. Then the selling price per unit is 30 rand. Then there is no beginning inventory. So on this first example that I'm doing for this video, the selling price, we don't have the what we call it, the opening balance. We don't have the opening balance in this case because this company started to operate this year, which means that they didn't have any inventory for the last year. So the example that I'm going to do for the second one, I'm going to look for an example which have the opening balance. Okay, so that you will know how are you going to treat the opening balance. Then the units product cost is 10 rand for variable costing and 60 rand for absorption costing. Okay, then the fixed manufacturing cost was 150 in the current year, then the selling and administrative expense is 160. So these are non-what manufacturing cost. Okay, and number E, fixed manufacturing cost. Of course, this one are manufacturing cost. Okay, then the selling and administrative expense were 50% fixed in the current period. So this will be affected by the variable. Okay, let's proceed. The net operating income is 90,000 under variable costing. Okay, so in other words, we've been given the profit for the year under variable costing method. Okay, then required, prepare the statement using both variable and absorption costing. Reconcile variable costing and absorption net operating income and explain why the two amounts differ. Okay, then now we have to answer the question. Okay, so let's start with the preparation for absorption statement. Okay, then I write down the format so that we're not gonna waste a lot of time. So the first part, we have to do the sales amount. Okay, are we given the sale amount? Remember, sale amount for both statement is always the same. Alright, then on number 2, they say the selling price per unit is 80 rand. So on number A, they told us how many units that they sold, which means in this case, we have to do what? To calculate. Alright, then we're gonna say the 20,000 units that we sold multiplied by 30 rand, then it give us 600,000. Then our sale amount, it will be 600,000. Please make sure that when you write for both statement for sale, because the amount is the same. 600,000. Okay, let's proceed. Let's proceed to cost of goods sold or cost of sale. Okay, let's start with absorption. Under absorption, where are we going to start? Okay, remember, it includes both manufacturing and what? Non. Okay, it's cool in. Okay, under absorption, it includes a fixed and a variable. Apology for that. Okay, so now let's show the calculation. Remember, let's start with a variable. A variable is 10 rand per unit. The unit cost is 10 rand for variable. So how many units did we sold? It's 20,000 multiplied by 10. Okay, 20,000 units. Remember, we only account for what we sold. Cost of sales go with hand in hand with what? With sales. You have to take note of that. This will give us 200,000. 200,000. But we are not yet done. We still have to look for a what? For a fixed cost. Okay, fixed cost. This on number E, they said the fixed manufacturing cost was 150,000 in the current period. Okay, what do we do? Do we include this 150 100,000 as it is. No. If you do that, you are going to get it wrong. Okay, what are we going to do? Very simple. Remember, this 150 was accounted for all product. 150,000, including the other 5,000 which was which is closing stock because it was not sold. Alright, so 150,000 is for 25,000 unit, and we are looking for amount for 20,000 unit. What do? We're gonna say 150,000 multiplied by 20,000 divided by 25,000, or you simply say 20 over 25. Then we will get the actual amount of fixed. Okay, it's 20 over 25. Then it will give you 120,000. Okay, let me put it down. Yeah, so now you add 20 plus 200,000 plus 120. Then it will give you the cost of sales under absorption. 200,000 is for variable, 120 is for fixed. So 120 we absorbed it. That's why it come back to what? To 120. So the other 30,000 we're gonna call it what? Under absorption. However, this is for not it's not for this lesson. We're gonna do it for the next video. Okay, then it's gonna give us 320,000. Okay, then now we can calculate the gross profit under absorption method. 600,000 minus 320, it's gonna give us 280,000. Okay, now let's go to variable. Remember, variable include only variable amount. Okay, if you still remember, we calculated the 200,000 on the first one. Okay, then after that, remember, variable also include non-manufacturing. Okay, on number G, remember F and G, they said the selling and administrative expense is 160 for the year. Then number G, the selling and administrative expense were 50% fixed in the current period. So in other words, number G is explaining number F that on that 160, 50% is fixed and 50% is variable. So under variable method or marginal method, non-manufacturing is included under what? Under cost of sales. So now we have to calculate the half of 160, which is going to give us 80,000. Then we have to say 80,000. Then the cost of sales will give us 280,000. Okay. Okay. Then you can write the name of that expense if you want to. Then remember this one we have to deduct it because it's an expense. Okay, then 600 minus 280 is give us 3. Okay, it's gonna give us 320. Okay, so this is the one that should be highlighted. Okay, so now we are done with on how to calculate the cost of sales under these two methods. Now let's go to period cost. We are done with the product cost. Now we go to a period cost. Okay, let's start with under absorption statement. Okay, as a reminder, let's go back to our notes. Okay, under period cost. Period costs are non-manufacturing costs incurred to operate the company. Then the period costs are accounted as an expense in the period that they incur. Then absorption account for both variable and fixed non-manufacturing cost. I'm looking for this principle. So under absorption, we are going to include both manufacturing and what? Non-manufacturing. Okay. Let's look at that amount. Remember, selling and administrative expense is always non-manufacturing. Okay, then we have 160, which on number G they explain that 50% is fixed and 50% is variable. So under absorption, we are going to include the entire amount of 160. I hope now it's clear from the principle. Okay, 160,000 is an expense. Don't forget to deduct it. Okay, then after that you can get the profit. Okay, it's gonna be 280 minus 160,000. It will give you 120,000. Okay, now we have to deal with the variable. Okay, what are we going to do now? Remember, under variable, a manufacturing fixed cost is accounted as a what? As an expense, which means that on number E, the fixed cost that we have for 150 is going to be accounted as an expense under variable method, as it was not calculated, as it was not accounted as an cost of sale. All right, then we're gonna have the first one of 150. Yeah, it's 150,000. Okay, then remember, okay, this one you have to write manufacturing fixed cost. Yeah, it's manufacturing fixed cost. Oh, okay, let me bring it back. Okay, then remember, under this method we only included the variable of non-manufacturing cost, which were taken under 160,000. If you still remember, then we still have the other fixed cost. It's going to be treated as a what? As a period cost, as it was rejected as a what? As a cost of sales, because this method only include variable as a what? As a cost of sales, or as a period cost, which means that the other 80,000 will be included as a what? Will be included. Okay, we're gonna have, okay, apology for the call. We're gonna have the amount of 80,000. This one is the one which was fixed, because we are dealing with the variable. It is not included as a what? As an cost of sales or a product cost. All right, we're gonna have 320 minus 150, then minus 80,000. Then we're gonna have the profit of 90,000, which on this question it was given 90,000. Okay, we have done with the two income statement. Remember, the second question say reconcile the variable costing and absorption costing net operation incomes. All right, this question is simple if you get the profit correctly. All right, number B, let's answer this one. The first one, we are going to say, okay, absorption income, we got the amount of 120,000. Then now we have to say the closing inventory. We have to show the calculation. How do we get this one? Okay, if you still remember, on the first part I explained that we manufacture 25,000 units and we sold 20,000, which means that the remaining one which was not sold is 5,000 units. Okay, 5,000 units. Okay, then we multiply by the difference between these two methods, the cost of these two methods. Let's go to number D. The unit product cost is 10 for variable costing and 16 for absorption. So the difference between these two methods is 6 rand. 6 rand. Then 5,000 multiplied by 6 is give us 30,000. Okay, then now we have to say the 30,000 minus 120 of absorption minus 30,000. It must give us a variable costing. 120 minus 30 is give us 90,000, which means that the reconciliation is correct. Our method is correct. Once you got the correct reconciliation, you have to know that your two statement is very correct. Alright, so I'm gonna do the other video, which you will get the link on the comment. So remember guys, on the statement that we have done, we don't have over absorption or we don't have under absorption, which I am going to explain to the example that I'm going to do next. Then the other part on this question, we don't have a opening balance, which may affect your absorption statement and variable statement. So I'm going to do that on the next lesson. All right.